Morning. Do 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 do. Just got the alert that I am live. Booyah! I'm gonna turn on the monetization. Live now. Live now. Okay. We're gonna go back. We'll go here. Morning, Chris. Morning, Joe. Let me move back. I have 10 fidelity notifications, which mean I went on a buying spree yesterday. I bought a bunch of stuff. I did buy a ton yesterday. Okay is here. Okay. Morning, Travis. Okay. I did a lot of buying yesterday. Mostly adding two things. Ooh, I don't recognize that doggy outside. I have a sick dog too. She woke up throwing up because she overheated herself and now won't eat. We haven't been to the vet in a good, couple months with another $1,000 bill. So, we've got somebody walking two little fluffy dogs. Don't recognize them. XLY, Costco, Palantir. Wow. Morning, Q. Let's see. I need to add, let me see. Morning, Tyler. I don't think there's anything. We've just got everything. Etsy, CRM, QCLN, which I was going to sell, XLY, Square, Snow. I got to look at, hold on. Let me look at my brokerage holdings because Apple, AMD, Amazon, AVGO I do have, Builder I have, Cat I don't own anymore. I'm going to take that out of here. But I am going to add that into the watch list because that's a quality one. BLDR, do I have that in the watch list? Yes, okay. I own that one. Costco I own. CRM I own. Crowd I own. Dell I own. Docu I own. Devon, Etsy, GCT, Google, IGM, ITB, which has been down. Could move up. Yes, Q-Tip. I did. Daisy is sick, okay. She went under the bed. Let me fill this story. So, dog went under the bed. It was 7 o'clock in the morning. She has to go under the blanket. I was feeling hot in the room. It wasn't hot. It was like 69. I pulled the covers over her. 15 minutes later, she jumps up, screams, is under the bed. I can tell she's got that smile on her face. Throws up under the bed. I clean up a little bit of it, and then she throws up again. And I take the bed off, the damn thing off. Got to take the mattress off, got to take the box spring off, got to clean out under the bed. And then we go outside. Everything's fine. She didn't eat this morning. She's probably still a little jelly belly. I need to go through this and see. Snap, I don't own anymore, but I want to put that in watch list. Uber Ulta. Man, I've watched Ulta just fall. And yes, Q-Tip, I got Mom's computer fixed. I'll talk more about that. Tyler, the new, I actually priced it out. Hold on. What's wrong? You want to go under? Okay. We'll put you under here. There you go. You're good. So the new Model 3 Performance actually is almost the price. I think it's like $1,000 more than my Model Y. Snap has been a good one, Chris. Snap has been a good. I mean, you look at the 4-hour on that one. It's got that range, and I've said this range is kind of where it trades, and when it broke out under there. Their earnings are coming up, and God, everything looks really good. Okay, I'm a Pepsi Oxy. Just do this. I still own both of those. Okay, these are my brokerage holdings, so ignore any investment advice. And yeah, it's expensive, Chris, and that's the problem. If they don't start turning a profit at some point in time, I mean, God. Hold on. Okay. Do you want to go under here? Do you want this one? There you go. God. What the hell is going on? It's a garbage truck. Stop. It's just a garbage truck. You two have been around garbage trucks before. Bitcoin and crypto. Ooh. Crypto. BTOP. Beth. DeFi. AETH. AT&T did really well. I mean, adding mobile phone subscribers is I mean, that's all you have to tell it. The street is we added mobile phone subscribers. Boom, your stock's gonna fly. Your stock's gonna fly. Covered call ETFs. XLYG, QQQY, SPY. I mean, Jamie Dimon yesterday. Energy. We can go to energy. PRR rig. PXD. PXD is 275. Why did I get rid of that? Yeah, Travis, I was shocked. I mean, I'm not going to bring it up, but Mara, I'm shocked at how much they've been able to make. I mean, they did release some stuff. Still not a UPRO, SPXL, HIBL, Quadruple X, TRK, Con L. Hold on. What? This is the 4th time you've gotten me up here. Yeah. Just stop getting baited. Okay, you want to go under there too? Go on. I don't think she wants you under there. This one. This is the 4 times leveraged ETF. And we have a cross up. And we have an ability for this one to move. I mean, it doesn't even have a 200-day. That might be a good trade. I mean, even Con-L coin long. This is up 2%. That's not. I mean, that's levered ETFs, low cost Vanguard. Ugh. Low cost ETFs. VXF, VBK, VSS, VTI, VOT, SPY, VOO, VWO. Okay, and that's low cost. Let's look at spider sectors. I think we got a couple. There should be a few in here. Sectors. XLY, XLI Industrials, XLE Energy, XLG, which is the top 50, XLC Communications. I mean, that's when you've got the full market moving like this. I mean, it's just URI, PLTR, MOD, TOST, Costco we already have in there. On at 32, Coin, Path, GLBE, MDB, PARR I've got in there already. Holy crap, almost this entire list. Twilio, Snowflake, Team, Atlassian, DocN, STRL, Okta, Cat, PayPal, CRWD, Melly. Oh, God. That's just the watch list. Let's see my not owned if anything pops up that I... Fortinet. God. Win, MGM, XPEV, Teladoc, QuantumScape. I mean, just... we got to put the ARCs in here too. So let's see. We've got ARC-G. We've got Fastly, QDEL, ARC-W. ARC-K. And is ARC-F and ARC-F. Yeah. God. Okay, let's go to the Dow. I mean, just if you want to buy a stock, buy a stock. I mean, everything's kind of turned around, so VCRM, Cat, and Disney. If you've been looking at a stock, I can almost... If a stock is moving negative, it's because it's been up. Intuitive Surgical, ISRG, mRNA, NXPI, MCHP, ODFL, Autodesk, Booking Holdings, CDW. I mean, just... DLTR. Let's look at the S&P. Abbott. MasterCard, GE. Booking, PayPal, Texas Instruments. Is up 6%. God. I mean, you want to break above your 200-day. You're right above your 200-day at 176, which brings you up here. up to, I guess it's almost all-time highs. Is Texas Instrument? No. I mean, you've got clear, if we go back here, you've got clear. Let's put it, we'll put it right here, 186. Look at how many times this tops out right there in 2022, in August 2022, comes up here, December 2022, comes up here, January 2023, April 2023, comes up here, July 2023. When's it getting above there? Maybe today. Larry. Okay, let me put this over. Wow. I mean, we've just got, yes. And we're going to go 4 hour. And we're going to go to the Qs. Wah, wah, wah. And you still don't have an entry on the Qs. But I would argue, yes, you should. Okay, now I'm going to open up. Let's see. We've got so much crap. SMCI got upgraded. We're going to open up Seeking Alpha and show you the analysis for me. There's the trending analysis. There's the trending news. Top rate of risk analysis for me. There you go. Okay. We've got that. We're going to go over here. We've got AT&T. We've got Boeing. We've got Microsoft support. I bought Microsoft. Sawyer Merritt. This is all Tesla stuff. I mean, I've got so much Tesla stuff. Off of X and Seeking Alpha. Well, that's convenient. Tesla expands. Robotaxi. They showed off their app, their new app. There's the earnings snapshot. Uber and Lyft fall. There's the new app, I think. Nope, there's the 26 things. That's what I posted yesterday. There's NASDAQ futures. There's the S8. Seeking Alpha Quant. Update 2024. Stocks. The portfolio soared 30% so far. I mean, these are the top 10 stocks. GCT, APP, CLS, MOD, Meta, Rolls-Royce, Abercrombie & Finch, ISNPY, LPG, MHO. So, and Steve did a good job of, let me see if there's anything on here. Steel Partners Holdings. Oh, Abercrombie. Insider sale. Sold a lot. CEO sold $44 million worth. Sold a lot. Is that a top at 110? It's at 119. Could have sold it here at 137. Target price 137. Bounced right off there. So interesting. Here's the Qs. Okay. Here I'm going to get started. Hit the like, subscribe. I feel like an influencer. Hold on, I got to turn on Do Not Disturb. Focus mode. And I'll get rid of that email. Wah, wah, wah. Okay. I don't want to gift the fucking article. God, I hate Seeking Alpha support is horrible. Horrible. And I don't say that from a billing perspective. I'm having problems, and it's the affiliate support, not the customer service. Essentially, okay, here's the long story short. When I do an article, I get an affiliate link so that when you get an article, they can tell who referred you over to that article because there's payments for authors, things of that sort that they kind of do. So when I add my affiliate link, when I go to an article on my phone and I say share, they used to have this nice where I could use the web version, but when I say share and then I put it into my affiliate, it actually winds up giving me a URL that is not reachable. So I asked them, hey, why is this not reachable, blah, blah, blah. And I did it for multiple articles. And the guy's telling me, oh, you need to gift an article. Well, you only get 5 gifts per month. I share way more than 5 articles. So the guy's like, well, we urge you to use the gift option. Douchebag. It's affiliate, not a gift. Douche. Let's look at the weekly real quick so I know what I'm talking about. Okay. Okay, yeah. Okay, we're going to do this. Good morning. It is Wednesday, April 24th. Good news. For anybody listening yesterday, Mom's laptop is fixed. It was a contrast issue. She couldn't get to the contrast. Had to kind of click on a different areas. When you change contrast, sometimes the buttons don't work exactly where they're supposed to because the contrast is off. I got 2 messages yesterday. I got that everybody liked my parents calling for tech help and using me as the Apple Genius Bar, and me yelling at the dogs. I guess there's a social request for a for those 2 things. So it won't happen again. Yelling at the dogs probably will happen again, but just coming forward, I'm going to go over the markets, going to go over Tesla. I'm going to go over Meta, Amazon, all the stocks that I purchased yesterday, as well as a just grossly hideous stock that I find disgusting that's part of the social request. I wanted to barf, and I threw the barf emoji up there for when I replied. But let's take a look at the Qs. First off, yes, we've got a turnaround. You don't have a purchase in the algorithm yet. In the Qs, you will later today. FYI, later today you will. That's the 4-hour algorithm in TrendSpider. The 4-hour algorithm makes you 21%. Buying and holding the Qs makes you 30% over 2 years. You want to use this as an entry point. If you're looking to get the Qs or get any of the ETFs, You want to use them as entry points. I don't suggest you trade these. If you want to trade them and they've worked out well, then you're good. The average win is 6%. So if you want to make 21% and trade in and out of Qs, you're fine. If you want to just make money, buy it and hold it long term. Now, I say that in the Qs. VOO, you actually have an entry point at 464.47. In pre-market, you're up at 464.90. We've seen a turnaround. You do have confirmation. Just understand, I've said it before. Yes, we're going well. Yes, earnings are really good. Yes, things are good. Typically, you don't have a V-shaped recovery, and then you go off to all-time highs. And how do I know this? Well, let's go back and take a look at the Qs, because when I tell you to just be patient with this, we do have the PCE, the inflation number, coming out on Friday. I've said it before, and I said it Monday and Tuesday, and I said it last week. That's going to be the key in trying to determine where this market goes. If inflation comes in hotter than expected, I expect another pullback and probably down to this 407 support. How do I think that this might happen? Well, let's take a look at the weekly chart. And I highlighted this from May, June of last year to the October lows where it took off in November. I said, hey, the MACD is very similar to where it was now. The RSI, super similar at 66. Take a look at the price action. It came down. It was choppy. We had a few good weeks in there where, oh my God, it looks like we're taking off. We didn't take off. We continued down. And this looks very similar. Look at this RSI. So this went from 74 down to 57, back up to 65 until it wound up getting to 45. This one, it looks like at the highs, we were at about 74. Again, same place. We bounced down to about 65 and then back up to 69. We bounced down to 50. We haven't hit the 40s yet on the RSI. The MACD is still trending down. This is just 1 week where we're green right now after 3 weeks of red. So don't claim victory yet. Don't claim victory yet, but earnings are coming in good. Again, you want to buy good companies with good products, with good earnings, and good management. Those are the things that you want to invest in. So when I go over which stocks I bought, that's what you're going to see. Now, Seeking Alpha, they at the beginning of the year, Steve Kress puts out 10 stocks for 2024 and 2023. This is the list of 10 stocks that he put out. This isn't Alpha Picks. This is part of Seeking Alpha Premium. Again, there's two different services. Seeking Alpha Premium gets you the quant rating for over 500 stocks. Steve is just the head of it, and typically he'll highlight a few stocks that have come in. Well, he highlighted GCT, he highlighted Abercrombie & Finch, Modine Manufacturing, MI Homes, Meta Platforms, Celestial, AppLovin, Dorian, Rolls-Royce. He outlined those three. They are up 30%. 30% versus 11% for the Magnificent Seven, which account for 29% of the S&P and 40% of the NASDAQ 100, 19% of the MSCI World. So although Apple and Tesla stocks have slid 14% and 43% respectively, earnings season is in high gear, and the recent correction in the frothy Magnificent Seven basket could deepen further if earnings fall short of loss via expectation. We know Tesla, it's not falling short today. I do expect it to pull back. But if you want to take a look at these Seeking Alpha updates, I will include this link to this article in the newsletter. The newsletter is free, dailystockpick.substack.com. I will include it. During the week, it is free. We do paid ones on the weekends where it's more educational. It's more in-depth about why I bought things, where I bought things, why I think it's positive, blah, blah, blah. So it's definitely more personal towards me, but it's a little bit more educational. And you can take a look at that if you want to pay for it. But dailystockpick.substack.com is absolutely free. If you want to sign up for any of the services like TrendSpider, Seeking Alpha Premium, or Alpha Picks, they are all here on the Linktree, linktr.ee/dailystockpick. You want to see that list of stocks, you can go to the article or you can go sign up on my Linktree. The Linktree saves you $50, and it gets you a free 7-day trial to Seeking Alpha Premium. I don't know why, when looking at this list, why you wouldn't sign up for it. It's a nice place to go that's commercial-free, ad-free, where you can go and look at quality stocks, quality analysis. So I'll include that in the newsletter. I also include the NASDAQ lead, S&P Dow, Tesla bump. This is just an article that comes out every morning with the big winners and losers, what's actually happening, things that go on. Here is the biggest stock movers of the day: Tesla, Texas Instruments, Enphase, and more. Tesla popped. We'll go over those earnings. Texas Instruments soared 7%. That one is on a watch list, followed by upbeat Q1 results. Enphase declined 8%. This is solar. This is part of the higher for longer thing, and people just aren't buying solar right now. And so Enphase, Sedge, all of those companies, it's just been a hard trough. I bought, just so you guys know, we'll go into Tesla. I posted this yesterday. I did not buy more Tesla. I was warning people that TSLQ historically have been hurt over the 4-hour algorithm. Let's go into the Daily Stock Picks newsletter because I said this. I posted this later. I didn't include this in the podcast. I probably should. So anybody that decided to short Tesla probably got burned a little bit. Let's see if I put it in here. I believe I put it in here. Yes, I did at the end. Visa and Tesla report. Should you do Tesla Q? Tesla Q in the 4-hour algorithm, currently on a 13% run. Then I posted the results of it's a back-tested strategy. The 4-hour algorithm is a back-tested strategy. In TSLQ, it makes you 104%. Versus TSLQ, if you just bought it and held it 21 months ago, you've lost 7%. TSLQ is the short of Tesla. So when Tesla goes down, TSLQ goes up. So you can play Tesla and TSLQ back and forth if you'd like. TSLQ backtested for the 4-hour algorithm. The key point, the average win is 13%. Well, TSLQ, if we were to go over here, TSLQ, it's currently in a 13% gain for in the 4-hour algorithm. So I said to people, you want to be very careful of what you get into with TSLQ because shorts have been burned on Tesla more often than not. And I said, you want to be careful. I was right. TSLQ in pre-market down 11%. Tesla is up 11%. So hopefully you didn't get into TSLQ. And if you were subscribed to the newsletter and you actually read it, you might have known that. I apologize for leaving that out of the podcast yesterday. But that analysis is what you get as part of the newsletter, and you don't have to listen to me rant on for an hour and take tech phone calls from my parents or yell at the dogs. But I pointed this out on Twitter as well, so follow me on Twitter. The 12 things that we learned, or 29 major points that we learned from yesterday's call with Elon Musk. These are 12 major things. My big thing is FSD will not be transferable between vehicles. So they're not letting – I was able to do it. I took advantage. Finally, with Tesla, I get something right and I timed something. Again, if I had waited about 3 weeks, I would have saved about $5,000. I didn't need the car for 3 weeks, so I probably should have just saved $5,000, but I didn't know. They change this pricing all the time. But that's the big one for me. There's a couple of other bigger ones. And the biggest one, I think, Uber and Lyft fall. Elon Musk talked about the Robotaxi concept. They released, you can find it all over Twitter. You can find it on any Tesla account. They released some screenshots of the new app that they're going to release, which basically is an Uber and a Lyft clone. It will call you a Tesla, and it will either be a Robotaxi or it will be somebody's personal. As a Tesla owner, I could go out and drive in the Tesla app, make money, and look at that. So again, you want to take a look at these things. Uber is a hold in the quant. Lyft is a strong buy. So, again, take a look at this. We'll go into Tesla. If you want an earnings snapshot, I'll include this. This from Bradley Freeman, the stock market nerd, points it out in a perfect way. So here are the results. $21 billion in revenue, Look at this. This goes all the way back to Q1 2023, or I'm sorry, Q1 2021, where there was 10 billion. You're below where you were in 2023. You were well below where you were in Q4 23. Auto revenue, significantly down from 21 to 17. Cars produced, significantly down from 495,000 to 433. Cars delivered, 484 down to 386. This is a growth company. Again, they're not growing. That's the problem. Let's look at some margins. Gap margin. They went from 21% down to 17%. X credits, because remember, they do get credits for all of the auto companies in the EU that have to pay that aren't producing electric vehicles. They went from 22% down to 11%. Their margins are cut in half. EBITDA, you're back to where you were in 2021. Net income, you're even below where you were in 2021. Elon said the auto business is a tough business. It's a tough business. This outlines it perfectly. So why is it up? Well, it's because of the Robotaxi, the $25,000 car, and all of the discussion that Elon had. It is nothing about the fundamentals of this company, but it is the discussion. If you go back to those 29 things, you'll see everything's about, well, we believe this, well, we believe this, well, we believe this. While you can hold them accountable, they also didn't release any real forward guidance. So expect this 11% pop. I would say that we are still in a downturn. You're up at the 160 level. So where are we going to open up? You're going to open up at about 160, which is up here. We'll put it at 161 right there. Look at how that support has gone from March. You had a couple of support levels in March. You had a couple of support levels in April. Are you going to hang here? I don't think so. If we look at the weekly, I think you're just coming back to where you were. You might trade up to 175. Do you get back up here? I don't think so. But again, we pointed out the 3 times that this stock got oversold down into that area, it pops back up. I think it comes down from there. The numbers were too bad. If they don't start delivering, they reiterated that they're going to deliver the amount of cars that they said. That means they're going to deliver something like 500,000 cars when they did 433,000. They're going to have to double up in order to beat what they projected. That's the problem. I just don't think that this is not one where you want to invest in now, maybe later this year. As we get towards August and they start getting full self-driving, I read on the internet, I think it's this one. Yes. Tesla owners are now driving an average of 14.7 million miles on FSD per day. That's a 250% increase from 3 months ago. That's 1 billion miles every 68 days. It took Tesla 3.5 years to hit 1 billion miles on driven on FSD. 3 years, and now they're doing it in 68 days. That is a tremendous amount of information. They talked about licensing this out to other auto manufacturers and that they have a couple that are interested. I do think that that's reality. I think this is such a popular software that that's what they are. Right now, I don't see this one becoming a huge gainer again. And the reason is the fundamentals. I think fundamentals finally matter on this stock. And when you look at this stuff, this was updated overnight. When you look at the valuation of this company, it is just it's like a software company, but it's still a car company. And they still need to sell the cars as they start to expand, as they start to get the robot that's going to be working in their factories, as they start to get their AI, as they start to get those types of things. I think you've got more fundamental that come into a software company, and then I think it's fairly valued. But in order to buy it today, you have to believe that they are a software company, not a car company. And right now, it's a car company. And until they get to that point, I don't personally feel comfortable. My parents still own a ton of this. My mom still believes in Elon Musk. I've been trying to get them out of it. I can't get them out of it. So there's your Tesla look. Where are you going? The 4-hour algorithm doesn't have you in right now. Still has you out. Let me look at it and look at a couple of the indicators. It probably will get you in the next couple of days. So wait for 3 days. This is definitely one you want to wait for 3 days. You want to wait for 3 days on this one. 3 days. Do not buy this one. Do not think that, oh my God, I'm going to buy it and it's going to pop to 200. The valuation's not there. All of this is based on speculation and forward guidance, but their forward guidance has been iffy at best. I do think Elon, with having 35 new executives reporting directly to him, I do think that Elon putting off India trip because he's got too much to go for Tesla. He reiterated it I think it was yesterday before the earnings. He tweeted out, the car business is a tough business. It's a tough business. Look at this Tesla weekly chart that TrendSpider posted, and you can see we had that support. Something had to happen. Something had to happen. If you broke that support down, boom, we were going down to 100. Do I still think that this is going back below 140? I do think so. I think at some point in time we get some bad news on this one. This is too good of news. They just loaded it up. I think you pull back. But again, hold off. Friday Friday with the PCE number could bring this one back to reality. So don't go buying this one. I just don't think that it's worth it. Microsoft. I bought a ton more Microsoft yesterday. Yes, take out everyone's stop and reverse. This is a daily chart of Microsoft that TrendSpider posted, and it goes back to January. Look at those right there. Right there. I mean, it just bounced right off that $400 level. I've said if you can get this one under 400, you should buy it. I bought at 402. Yesterday, I bought at 406. Today, we're at 409. Their earnings are tomorrow after the bell. The algorithm still doesn't have you in. It probably will get you in today. Do we hold on to these gains? We'll go over it. Earnings are really good. Microsoft, very, very good. I bought more of it yesterday, $50,000 more. That means I am well into the six figures as far as my purchase of Microsoft before earnings. Does it go down? Again, it depends on Friday. Why am I doing this? Because I have significant dollar amount below this. The purchase price, I think it's around $50, $60 is my average purchase price on Microsoft. So I want to build a higher purchase price. So I don't mind if we go back down to $350, I'll just buy more. Again, this is for a long term. If we go back down to $350, I'm going to try and manage it as best as I can. Maybe I trim some of it at a higher point. But look, you are going up to the 430s is where you're at. If we go and we look at Microsoft here in Seeking Alpha and we look at the valuation of this, it's an F. The PEG, C minus. I mean, again, it's trading 38% above. Wall Street says it's a strong buy. What's their average target price? 471. That's 15% above where we're trading now. Now, the 52-week range on this, I think you got up to 430, 420, if I'm not mistaken. Let's take a look. 430, $430. I just bought at 409. We know it's got 430 in the tank. So that's why I'm buying this one. Now, another one that I bought. But again, I'm not listening to the algorithm. I'm predating the algorithm. So I'm not trading this. If you wanted to trade this on the algorithm, you make 24%, which is great because we talk about different risk tolerances. If you have a fear of buying a stock close to its 52-week high, use the algorithm. That makes you 24% in 26 positions over 24 months. So it's not like you're trading in and out of this every day. It's one position a month about. If you bought and held this, you've made 46%. Again, these are back-tested results. Past performance does not predict future results. But in the realm of Microsoft, I think there's a lot of good news within Microsoft. Your average win, 6.89%. It might get you in here within the next couple of days, maybe even today, right before earnings. Now, that means look at the weekly on this one. But with different risk tolerances, you might want to trade this. And 24%, you might be very happy with 24%. Me with Microsoft, the stock hasn't done shit for 10 years. So I'm happy that it's finally moving. I'm super happy that it's finally moving. Here in 2019, it just started moving. So you can see that upward path. We've still got a huge positive move in this one. I bought more Amazon. I said Amazon under 180, buy it. This was a five-figure purchase. Five-figure purchase. I bought more Amazon. 188 we talked about it yesterday. There was an article yesterday in the newsletter that said Goldman Sachs thinks it's going to blow past its all-time high at 188. That 188, it's provided resistance. You can clearly see, I said, back here in 2021, in July, it hit 181. Here in November, it hit 181. Then you saw the big downturn, the death cross. Boom, you had the death cross. What happened? Everything started moving. On the weekly, we just had the golden cross. You're heading into earnings. The AI with AWS. I mean, this isn't, all of the Meta stuff. It's all housed on Amazon Cloud. So I think they're going to do really, really well. I bought more Meta. If you haven't used Meta's AI, go ahead. Try Meta. It is fantastic. The AI is just probably even better than Google, to be honest with you. As far as creation and some of the answers that I've been getting, I bought more. Under 500. I said buy it under 500. It is now at 509. It is now at 509. The TikTok ban went into place. I think it passed the Senate, or it needs some more debate. I don't know. It's going to pass the Senate. It's in there. If Donald Trump becomes the president, he's going to wipe that out. He's going to say, you know what, we're going to do a deal. He's going to have to work with the Democrats because I think you're probably still going to have one of the houses that allows it back. But he's going to have a problem doing that. Again, I bought more Meta. So I bought Microsoft, I bought Amazon, and I bought Meta. That's what I did. Does all this buying mean that I think we're on our way up? No. It just means I bought the dip. Very rarely do you go back, and we talked about it with the Qs. Very rarely do you go back in a V, but at this point, I think it's worth the risk. I also think Friday's PCE is going to be key, so these buys are just positioning for the long term. That's it. That's it. Now, let's talk a little bit more about Tesla, and we can take a look at this chart real quick. I think I'm going off script here, but there's your Microsoft stuff. Tesla popped on earnings. They missed, but not as bad as expected. It was priced in. I think TSLQ algo had 13% average. It was there. Stock moved higher because of the earnings were horrible. Margins down to 11%, was 20%. But they released images of the ride-sharing app, blah, blah, blah. This is how bad the quarter was, and I already showed that. Visa beat. Mattel beat. Texas Instrument beat. Earnings are solid. Microsoft support level, we went over. Earnings, Hilton beat and raised. Hasbro beat and raised. Tesla 12% up 12% with horrible earnings. Analysts are giddy. Look for a pullback. These are my notes. Boeing missed. This was pre-announced, by the way, but Boeing missed. But they missed by a smaller margin, and that's what's crazy. Boeing stock up 4% to 177. I would not buy this stock, but I've said this before. This is the range that you trade this in, 230 to 176. I think that's the range that you trade this in. If we go and we look at the weekly, you can clearly see this is the 176 to 220. That's the range that you want to see. This is a clear trading range. If you want to get into this, again, if you're flying on Boeing planes, you could buy this one. Do I think one's going to fall out of the sky? I don't think so. It just missed less than expected. AT&T, we can talk about AT&T. AT&T climbs on Q1 profit beat as postpaid phone subscribers rise, affirms 2024 outlook. The consumer is strong. All of this points to the consumer is strong. The economy is strong. You want to be positioned in this market because the consumer is strong. Now, my 4-hour algorithm over 2 years in AT&T loses you 5%. But if you want to trade AT&T and lose 5%, that's up to you. I don't think it's a good stock to trade. But buying and holding has lost you 15%. That's crazy to me that somebody would buy this. You've got a death cross going on. Even though the algorithm got you in at 1636 and you're trading at 1681, I would argue you don't want to buy this one. The one that I would buy is Verizon. Look at this weekly. The weekly, you have no hope of this one. If we were to go over here and go to Verizon and we look at this one at least has some positive movement in it. Even in the 4-hour algorithm, you make 4.8% versus losing 19% if you bought and held for 24 months. Now, if we go to the weekly on this one looks like it's got some hope. The 50-day is turning around. The 200-day is still negative. I just could, Verizon, it's a capital intensive business. Look at your phone plan. Are you racing to the bottom? Do you want to save money on your phone plan? Well, guess what? I've got a way for you to save money on your phone plan, and it's through Verizon. You get the same damn network that you get for $80 a month for $25 a month. Oh, and guess what? You save $20 off your first month. If you've got an Apple Watch and you're paying $10, just upgrade to the $45 a month plan. It's included, and it's $45 with everything. You don't get tax on top of this. You don't get fees on top of this. It's $45 or $25. I am on the $25 a month plan. Use my link and you save $20 at Linktree. Use my link and you save $20. If you're paying more for your phone service, just go and get Visible. I am, the porting of numbers and the eSIM stuff makes it so that changing your phone service provider is painless. I did it for my parents. Took a little bit longer for my parents, but I did it. Yeah, it was nice and easy. So let's take a look at this. Seeking Alpha Premium, it's so good. It's so good. Look at this analysis for me. So what do I talk about a lot? Tesla, Google, Netflix, Tesla, Amazon, Tesla, S&P 500. This is the part of the Seeking Alpha Premium that you get on this homepage, and it is so good. We talked about the S&P 500 gainers. Yesterday, Global Life up 14%. This is the one with the short interest. This is the one that lost 50%, and it's on its way back. We said any reaction in the market is an overreaction. Algorithm got you in here at 65. You're at 76. You're probably coming up here to cover this gap at 98. Again, you have to make sure that the news is good on this one. But if you go to Seeking Alpha and you look at this and you say, you know what? That was up 14% today. Maybe I can make some money on this one. Let's go and look at the quant on this one. Well, it's a hold in the quant. Its valuation is a D+. Remember, this is part of the problem is that they have their earnings call presentation. Earnings come in a hair below consensus. Your guide in line. They guided in line, even with a short presentation that they were basically taking life insurance out on dead people and making them pay for it. That was the short thing. I don't know if it turns out to be true, but they're guiding in line. If you look at Wall Street, it's a buy, and you look at the price target. The price target is 127. Up 66%. We'll take a look at some of the revisions. But look, they brought their price target down from 137 down to 131, down to 127, and you're trading at 75. If we go and we look at the revisions, A-. Look at this. 8 of the last 3 months, 8 revisions up, none of them down. 3 revenues up, 2 revenues down. Okay? That's not bad. For a company that came out with a short, somebody shorted it. I mean, this is pretty good. Global Life. It's a big one. And again, you can find that kind of stuff on Seeking Alpha. Let's go and take a look at AMD. Because AMD, they just came out with the quant upgraded AMD from a sell. I think may have been a sell, or not. It wasn't a sell. It was a hold to a strong buy. It jumped to 2, and you can see the analysis strong buy. I think you should be in SMCI. I think you should be in NVIDIA. I think you should hold AMD. This one has pulled back. This one has pulled back from $211. Do not think that this one is a cheap stock, but it's got a C- valuation. We can go and take a look at the PEG. The PEG ratio that Steve Kress from Seeking Alpha loves, it's 46% below the sector median. So with their projected growth, this one could be a big one. Now, do I expect this one to be huge? No, Taiwan Semi, still the top. If we take a look at Taiwan Semi and we chart this one's still a strong buy. And I think Charles or somebody in the Facebook group said, why is this one going down? It's going down because it was up so much. I mean, understand some of these stocks, the stocks just don't continue to go up, and never come down. This is a pullback, and you can see clearly that AMD pullback. That AMD pullback is even more than Taiwan Semi. So if you bought up here and said, why is it going down? Well, it's going down because, last year at this time, it was down here. It was down 4%. So AMD, in my mind, I think AMD is a buy. We can go over here. And again, you want to use all of these tools together. So you look at the fundamentals and you say, oh, fundamentally, they tell me that AMD is a buy. Look at it on the algorithm, the 4-hour algorithm, which is just charts. This is technical. Now, we had a buy here at 164. The algorithm still has you in, hasn't gotten you out, and boom, all of a sudden, now it did get you out. It hasn't gotten you in. It will get you in probably today at 156. Go and buy it. I don't think that it's expensive. Their earnings are coming up next week, April 30th. I think you can buy this one. I think we've got NVIDIA. I think we've got SMCI. I think we've got all of these companies, the chip companies, reporting. We will find out next week if AI continues to be a strong play in this market. My assumption, abso-freaking-lutely. Abso-freaking-lutely. There was Mike Mayo from Citibank. He was on this morning saying Citigroup and the other banks, he thinks Citigroup could double within the next 2 years. He says it's 62. He says it's $120 stock. And he said, if we go over here to Citigroup and we look at the book value, and the book is 99. It is trading 30% below its book value. When a bank trades below its book value, you want to buy it. Traditionally, that is the sense. We can look at Goldman Sachs. Okay, this is a great example. Book value, 319. Where's the stock? 424. We can look at JP Morgan. Book value is 103. It's trading at 192. We can look at Bank of America. Book value is 33. It's trading at 38. We can look at Wells Fargo. Book value is 46. It's trading at 60. If you want a discounted stock, it is Citigroup. It is Citigroup. So he pounded the table on that one. He likes it going forward. Let's go over to Seeking Alpha and let's look at Citigroup here. Because where is Citigroup right now? I think it's a hold or it might be a buy in the quant. Looks like Seeking Alpha analysts like it. Jane Wells, who's their CEO, is turning it around. It's a hold. And it's got a B+ on the valuation. And we can look at it. Look at the PEG. The PEG, which is Steve's number one thing. He loves it. The PE is a little bit expensive, but he loves it. If we look at the revisions, it's a C. 8 revisions up, 13 revisions down. 16 revisions up on the revenue, 1 down. So earnings per share might disappoint. I think they've already had their earnings, if I'm right. Yeah, they had their earnings. You can see it's on a rebound, $60. If we look at a weekly on this one, we go back, you can see, is 120 in this? Well, 80 probably is, and you're trading at 62. Your 50 days moving positive. He thinks the banks are positive. We've talked about how high the MACD is on some of these weekly charts and how high the RSI is, and we could see it. Did we see this pullback, or are we setting up to trade here at 60? It's probably a pretty good upgrade to look at that type of thing. SMCI. Again, that's an idea. SMCI perks up as KeyBank starts sector weight. This is still a strong buy in the quant. It is still the number one stock in information technology. We can take a look at this. It's been a strong buy since it was here at 470. Their earnings are next week. People, last week were like, oh my God, this is the dip. Are we out? Blah, blah, blah. Should I get out of this one? If you didn't buy at 793 on the way up, you shouldn't buy it now. I mean, honest to God, if you're worried about this one, just stay out of it. It's super volatile. We don't know where we're going. We're probably getting another buy here. It's up 4%. I think it was up 11% yesterday. So if you bought this dip and you got the sixes, like I said, you're probably doing pretty well. I bought it 1,050. I'm still holding that one. I think we pop up there next week. I'm going to dollar cost average this one. I'm not getting out. I don't need the cash. I could have sold because it's in a retirement account. My average purchase price in my brokerage is somewhere around 250, 260, somewhere in that neighborhood because I continued to add it. This is a name you want to continue to add. The valuation is not crazy. SMCI, solid company. It continued. Remember, Loop Capital came out last week, right before the big downturn on Friday. $1,500 price target. That is going to double. So if for some reason we get an enormous earnings, we heard that China's using the SMCI rigs to order their NVIDIA chips that the U.S. government said they shouldn't order. Well, SMCI probably did that. So somebody's super in demand. So I do think SMCI are at 794. Perfectly fine. I've said it before. Perfectly fine. So SMCI, great trade. So there's a couple of things. Again, today after the bell, if we go to, let's go over here to Earnings Hub, because Earnings Hub is my new favorite. I like it better than Earnings Whisper. Earnings Hub is my new favorite website because they give AI analysis of the earnings as well. Today after the bell, who do we have? We have Meta. We have IBM. We have Now. We have Lam Research. We have Waste Management. We have Chipotle. We have Ford. We have Raymond James. We have Align. We have Anali. We have Viking Therapeutics, VKTX. This is one with the GLP-1, I believe. Viking reported significant in their clinical programs, particularly with their obesity and NASH treatments. So this one could be huge. Could be enormous. If you want the earnings, use Earnings Hub. I love it. I don't pay for this. After the bell tomorrow, what do we have? Microsoft, Google. What do we have before the bell tomorrow? We have Merck, AstraZeneca, CAT, which I said in my paid newsletter. I think it's probably going to be a good one. So you've got a ton of earnings. Use the tools that you have. This is a free tool, earningshub.com. And that AI analysis, fantastic service. So use Earnings Hub. I'm not going to include this this is a podcast exclusive. So if you just subscribe to the newsletter, you ain't going to get this. If you're listening now, kudos to you. By the way, if you want to see some of the earnings kind of things, go to Old Dominion Freight. Let's look because they have their earnings. They missed. They're down 1.43%. If you want to see AT&T, they made it. And what they'll have later, that once they have their phone call, they'll have an AI analysis of the phone call. I really like this site. Let's look at Boeing. You can take a look at this. They beat. They were better than expected. Expected $1.65 loss. They only lost $1.13. That's a 31% beat. The stock deserves to be 2 to 3% up. But again, it doesn't take problems out of the business. It just says, hey, they're losing less money. We can go back. Let's look at Tesla from yesterday. Let's look at this. There's the AI summary of Tesla. You want to see what was said on the call? Go and read this. Tesla successfully navigated unforeseen challenges in the ramp of the updated Model 3 in Fremont. The company saw record profitability for the energy business, particularly with the Megapack, and expects this trend to continue. AI training capacity more than doubled sequentially. New vehicles expected to launch earlier than expected. You can view the full summary. Again, earningshub.com. This is part of Savvy Trader. Just so you know. Oh, and by the way, if anybody wants to know or get an update, Savvy Trader, if we go over here to Discover, let's look at some of the year-to-date winners. Best return year-to-date, ya boy, 37%. And again, 31 events year-to-date. There's 31 trades year-to-date in this. If you want to subscribe to it, you can. It's $25 a month. I report most of this. Here's the other thing. Look at macro 3 times ETF performance from my weekly stock. He's got a 17%. So your boys are up on the winning percentage right there. Hamed Shoji, who is the CEO of Savvy Trader, 13%. I don't think he gives me enough credit. I think he should be patting me on the back. So I like this one. I like this one a lot. The portfolio is good. If you don't want to pay, and don't think that you have to pay, but if you don't want to pay, I have a free portfolio for you to follow too. Daily Stock Pick Core Portfolio. These are 35 names that you can buy. And if we just look at year to date, this is 100 shares of stocks against the Qs. Look, the Qs are up 3.81% year to date. I'm up 15%. And this isn't even trading. This is just taking stocks out. It's an equal weighted ETF. I take 100 shares out when I remove a name. I add 100 shares when I buy a name. Doesn't matter. Eli Lilly is a great example. Eli Lilly was trading for about $500. And if we look at Eli Lilly, this was trading, cost $54,000 because I bought 100 shares. Current value, $74,000. It is up 36%. When did I buy it? Let's see. If we just go back down and look at the history of this one, purchased 100 shares at $542. That was on August 18th. Paid a couple of dividends, $130 dividend each time, $1.30. Again, it was 100 shares. So don't think that I'm doing anything like fantastically amazing. I'm just picking good stocks. You pick good stocks with good earnings, with good products, and good management, you'll be fine. Let's go to social requests. This is the one that's disgusting. Travis asked me, how does Crocs look? I see them on kids of all ages. I would never wear a pair, but my kids all have a pair. I've seen the Taylor Swift ad for Target. I like it long term. Crocs. Crocs are just a disgusting. Remember, I always say, I will not buy a stock in a product that I don't necessarily use. I own Google, not because I have an Android phone. It's because I use YouTube tons. I use their Gemini AI a ton. I use Gmail. I use Google products. I own Apple because I have Apple products. I own Uber because Uber is what I use when I travel. And I get to the airport and I don't have a rental car. I trade Roblox because I don't play Roblox. So if you want to trade Crocs, I think you're fine trading Crocs. Now, the algorithm makes you 37%. Buying and holding makes you 85%. I can't argue that this stock is an upward trend. I would never wear these. I think people who do wear these are a scourge on society. But the worst people are, I will give Crocs credit because the worst people are the people that wear freaking flip-flops and sandals without pedicures. Because I don't care if you're a guy, I don't care if you're a girl. If you ain't taking care of your feet and making them look good, don't wear sandals. Put socks on those little strangly things. And here's the other thing. If you're going into a public restroom or flying on a public flight, put some freaking socks on. Wear some covered shoes. In Muslim society, it's an offense to show the bottom of your feet. Yeah. Dude, just put some socks on. And there ain't nothing wrong. Your boy here wears the flip-flops, the slides. I don't wear the flip-flops where it goes in between. I wear the slides with white socks. Put some socks on. But let's look at Crocs. Here's Crocs. You have a MACD cross up. Got you in at 125. You're trading at 126. You have the earnings coming up here on May 6th. We can go over to Seeking Alpha and we can look at Crocs. Here you go. Annual estimate revisions. Earnings per share revisions up. 14, nothing down. 7, up. This is in the last 3 months. 6 revisions down on revenue. So let's take a look at the summary of this one. Is it a buy in the quant? It's a strong buy. The valuation is a C, but it's a strong buy. It's ranked number 1 out of 9. Let's see. DEC, which has been a huge winner, got a pullback. It's back down at 3.47. On, which I say trade around 30, which has a cross up, is number 5. So Crocs it might not be a bad thing to buy. Personally, I'm not buying it. You can see the 52-week range. It's all the way up to 150. So with their earnings, what's coming up? Sneakerheads losing interest in spending less. I don't know, 1 year, you're down 16%. 5 year, let's see what the 5 year. Oh, let me refresh this. It doesn't like all the stuff that I'm doing on this thing. But let's take a look. So let's see, year to date, I think you're up year to date. The charting, it doesn't like you. Charting, you're up 35%. 1 year, you're down 16%. 5 year, you're up 356%. I mean, look at that all-time high, 178 in November 2021. This seems like it was a pandemic thing. I mean, Crocs was a pandemic winner? I have no idea. It looks like it was a pandemic winner. Over 10 years, you make 726%. Not a horrible thing. So Travis, I don't think it's a horrible thing. I'm still not buying it. Still not buying it. John Newhall, I have the Webull app, but I downloaded it without going to your link. Do you have a code that I can put in so that you can get a referral bonus? No. I will call you a douche because you absolutely should use the link tree for anything. If you want to join Webull, it's right here. You get free stocks. John, you may not have gotten free stocks if you didn't use my freaking link. Maybe you did. Maybe you didn't. But my free link gets you up to 75 free stocks. Just use the link. Again, I love the Webull app, but there's no referral. Again, if you use any of these, if you basically sign up for TrendSpider without using my link, I ain't sending you the 4-hour algorithm. I'll work on it on the back end if I can get you hooked up. But if you use Seeking Alpha and you don't use my link, I ain't getting anything. There's nothing I can do. So, Tristan, Norwegian Cruise Line to cover June 7th peak gap. If good earnings are reporting, your thoughts, still trading 50% below its pre-COVID. Here's what you have to know about Norwegian. NCLH, I think it is. Let me type it in. Norwegian. Norwegian Cruise. I wish you guys would give me the symbol because I'm NCLH. Yeah, there it is. Because I don't remember these symbols all that well. NCLH, stuff that I don't own or trade. So here's where you are. And yes, you are down below where you were pre-COVID. The reason you're down this far below pre-COVID is because in order to survive, these guys took so much debt and sold so much stock and devalued people so many times during that time that it's never going to get back up to that. So if you think that you're buying this because it's going to go back to pre-COVID, you're absolutely 100% wrong. This is a super, you're down 39% from 10-year investment. A 10-year investment, you're down 39%. You're not going back up there, but this one does have room to run higher. So Norwegian Cruise Line, from a valuation perspective, it's a C+. You look at that peg gap, the peg going forward. They don't release any stats on that, so I'd be a little bit careful of that one. If we go on growth, A-. You can look revenue growth 76% year over year. Forward revenue growth 27%. Operating cash flow 855%. That's fantastic. If we go and look at revisions, it's a B+. If we look at the last 3 months, 9 analysts revisions up, 7 down. It's not great. Man, it's not great. You can take a look at this. If we look at the stock chart and we go to the 4-hour algorithm, here's where the key is. And this is why I say you can trade this one. I don't necessarily like to own this one. Royal Caribbean is an alpha pick. That is one you may want to buy into. They think that cruising is one of those things that they can buy, but we can compare Royal Caribbean to Norwegian. But here, algorithm got you in at 18. Okay, it's at 19 right before earnings. The 23% gain that you make trading this one over 24 months, you lose 7% if you just bought and held it. Your average win 21%. You're not up 21% on this one. If you look, there's a nice little gap up here at 20 to 21. There are gaps all over this chart. So it is just one of those that continues to gap down. This is an earnings gap. This is an earnings miss, 21. Do they make earnings this time? I don't know. Again, you have some people some analysts that just have revised this down. If we go and look at the peers, Royal Caribbean should be in here, and it's not. Let's just do Royal Caribbean. I'm gonna take this out, and we're gonna look at Royal Caribbean because Royal Caribbean's the only other one that I really know of cruise lines. I think there's Carnival too. CCL. We'll take a look at those three. Those are the only ones that I know of cruise lines. I think there's Princess. There's other ones too. Look at Royal Caribbean. Over 1 year, up 120%. It's great that Norwegian's up 50%, but 120%? Look at Carnival. It's up 60%. Take a look at the quant. Royal and Carnival, strong buys. Seeking Alpha analysts, they have a buy on Royal Caribbean, a hold on Carnival. Look at Royal Caribbean. It's 10 of 521. Sector rank of NCLA, 71. Well, let's look at the valuation. It's a C on Royal Caribbean, but it's an A on quant factors of growth. I think you choose Royal Caribbean. Look at the 52-week high. You're down 3%. You're down 14% here. So you may have more room to grow. But again, don't be afraid of 52-week highs because you might look at the returns on Royal Caribbean. Now, the returns on Carnival are just horrible. The returns on Carnival are horrible. Returns on Norwegian, they're okay. I mean, you got to trade that one. Look at the valuation. There's no peg going forward. Trailing 12 months, never mind. But look at the non-GAAP. Look at the PE, 15 versus 13. Look at the valuation, 11. Look at the valuation, PE non-GAAP full year, 8 to 10. Look at the PE going forward, 18 to 13. Again, look at the growth, 76% to 57. Forward, 27 to 25. I think that you look at what you want, but I don't know. I'd trade it. Honestly, any of these, I'd trade. Royal Caribbean is the same kind of thing. I mean, if we go and look at chart on Royal Caribbean, I don't know cruising. But it's all about the debt that these guys took on. If we go and look at the weekly on this one, you can see it's down. This one's actually made its way back almost to where it was pre-COVID. But Norwegian just has so much debt that's the issue. That's what I know about it, Tristan. So maybe I'm wrong. The scans. I will include this in the newsletter. Let's just say we are probably in a huge bull market. And the reason is because the scans, there's so many scans. Obviously, we've had a good 2 days. The algorithm is based on MACD crossup, and the MACD is moving upwards. Bitcoin and crypto, there were 4 of them. Energy, there were 4 of them. Leveraged ETFs, you have UPRO. One that looks interesting, and I will tell you, and the market is open, it is now 9:56. 4 X's. Okay, 4 X's. This one looks interesting. Got you in at 33.15. You're trading at 33.31. This is a 4 times levered on SPY. And look at where the MACD is. Super low. Look at where the RSI is, 45. This is a 4 times levered ETF. This is not one you want to buy and hold. This is not one you want to buy and hold. You can't. It's only been out for 4.7 months. So the back testing, the algorithm makes you 17%. Buying and holding makes you 33%. But look, you didn't get into this until you got here. So this one started down here at 25. It got you in at 29. So far, you win 67% of the time because it's only had 3 positions. So in 4.7 months, you've had 3 positions. This one just got you out, 22% gain. So if you think that we're going up on SPY, again, remember, Friday is the key. But this is one of the levered ETFs that you can trade. It's an interesting one. Another levered ETF that you can trade, CONL. This is the coin ETF 2 times daily. Got you in at 56. You're trading at 57. Do we get back there on some type of move? We talk about MicroStrategy being a levered ETF on Bitcoin. This is a levered ETF on Coinbase. And that one moves a lot. MicroStrategy got you in yesterday, 13.11. You're trading at 13.20. If Bitcoin's going up, this one's going to go up. SPXL. This is a triple levered ETF on the S&P 500. And this one, Again, we use that 200-day as support, 119.39. You're trading at 119.94. So if we are going to move up, these things are going to move up. Now, where are we on the Qs? And I want to point this out too. Remember, for all of last week, we started heavy. We started the day positive and then moved negative and continued to move negative. Where are we today? And this is important because yesterday we had a nice bull rally yesterday. Well, this is a 5-minute chart, and this shows you the live movements of the Qs. We gapped up. So we went from 425 to 427. We're trading at 428, and it's got a downward movement now. Do the bears take over? Because we've had such a good 2 days here. We can go back and we can look at April 22nd. Here you go. This is Friday right here, and we move into April 22nd right here. You see the move up, and then it moved down, and we talked about how 413 provided the support later in the day. Well, if we look at that one, maybe we're doing the same thing as we did Monday. We move down until we move back up. You've got Meta after the bell. You've got IBM after the bell. You've got a lot of things after the bell. But you do want to take a look at that. We've got 5 spider sectors that moved up, including XLG, which is the top 50 S&P. So take a look at this. One that I want to point out too, and I won't put this in the newsletter. This is just a bonus. Pelosi's Pan-W calls. It's coming back. It's coming back. It's moved. Do we get back to 300? We're at 292 right now. The S&P, the 200 days right at 305. The 50 days starting to move positive. Take a look. There are things moving in this market. The buy-in here was 278. You did well if you got it. Get it under 300. The Pelosi pump is pulled back. This is the Pelosi pump. Remember, that was the Pelosi pump that got it up to 368. Yes, it was overvalued. This will continue to be overvalued. If you have any questions, hit me up. Remember, TrendSpider has a sale. Saves you $1,888. $699. $58 per month. If you can't make $58 per month, this one saves you 61%. It's great. Get it monthly, $149. Whatever you do, use my link and then email me and I'll send you all my algorithms, all my watch lists, all the custom scanners, everything that I have. If you want Seeking Alpha Premium, which I continue to say is the best value out there, $189 for the year. Ad-free news and analysis plus the quant. Steve has a great point, and I need to start doing this too. If you see over here, all the portfolios, he actually has about 15, 20 portfolios that he's done, like the Mag 7, like his the top 10 quants rating from the beginning of the year, 2024 and 2023. He's got all of those in a portfolio that he can track. And when you import it, it gives you a portfolio score. And so all of his stuff, he can take a look at and say, hey, the health score looks good or the health score looks bad. He was talking about it on the podcast. And you can look, Google, Quant, it went from a buy to a hold. Strong buy is Pepsi, Uber, Walmart. You got strong buys on all of those. You got strong buys on Qualcomm, Exxon, Palantir. Got strong buys on Shopify, Uber, UNH. Strong buy on Walmart. You got a strong buy on all of these. So this is the core portfolio. I don't know why it's got so. This is when it changes. Okay, that's why. We can look at the summary. The summary is where you want to go. The summary just of these. So you can take a look at these. You move across here. There's your holdings. There's your after hours. You can put in how much you have of each, whether you add to it and stuff like that so that you can keep track of all that stuff. I think if you import it directly from your brokerage, I think this may keep track of it. Your ratings of everything, your upgrades, downgrades, earnings. You can take a look at when earnings come out. This is post-market on May 2nd. I'll be traveling that day, by the way. I think maybe I come back the day before. Amazon, earnings revision grade, dividends, valuation. This is what's great. And again, it's all about getting organized. But I really like this. And if you just don't want to do anything and you want 2 data-driven stocks each month, get Alpha Picks. We talked about GCT. GCT was their most recent one. I bought that one last week. And we've talked about this a lot. Where are we on this one? 36. I think I bought it 32. You can see where they picked it up at 30. They just buy it that day. And they don't do anything special, but they have 130% gain versus the S&P at 37%. That is a fantastic portfolio. They tell you when to sell. They tell you when they trimmed SMCI up there at over 1,000. So they do really, really well. Again, anything that you want, it's all in there. Okay, take care. Talk to you tomorrow. After Meta earnings and IBM and everything today. Take care. Ooh, Tesla's up 14%. It's continuing to go up. Momentum is a strong force. See ya. Morning, Scott. Good play on TSLQ, Chris. Wah, 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 wah. Q-tip. I don't even wear Birkenstocks. I don't wear any of that stuff. Let me see. Indices check. Meta's going back under 500. Just so you know, if you wanted to take a look at it. I gotta call Chastain. Okay. Okay. I gotta run. I gotta call my vet. They're denying Daisy and Penny heartworm stuff. So, okay. I'll talk to you guys later. Tomorrow. Say bye.